Hola, welcome back. We're here in season 2 of Lots of Growth, Me versus Me. There's been quite a bit since our last episode together. That was on a Wednesday. I think Tuesday. I was supposed to send a video out on Wednesday, didn't manage to do that. So I owe you quite a bit of videos, none notwithstanding a monthly reflections, a weekly review, and that video that I was talking about and teasing on last week. But before we get into that, we have to first get into our Monday pre-session, which for today is our London pre-market, and we're doing one for the whole of the week. So let's jump right into it because we haven't got enough time. It's been a busy day, and I want to make sure that I go through these processes as deeply as I can. Meaning I want to make sure that I give full quality of analysis and focus to all these sessions. Disclaimer, this is just me documenting my process, and my intention with that whole process is to get payouts, but also to make the right decisions on the way to getting payouts. I think that's a more sustainable process. Today, our preparation is gonna be with the two kiddos in the back. So let's head straight into our mindset preparation. Emotions and stress wise, say hi. Hey, you wanna go in the screen? No, it's okay. It's down here. Yeah, higher a bit over here. That's okay. So Gabriel's here. He had a stressful day, didn't you? He had stomach upsets and he's been with me the whole day. So that's why I didn't quite do Asia session. But that was also on top of the fact that the market is prepping up for an explosion. So that's why today I'm only running my ranging accounts and not running the whole set of accounts. So that's the edge affirmation that I'm taking in today. And I'll share later on the A+ plans and the ideas of why we are still executing on a ranging day. Being balanced and patient, being detached from the outcome, that is what we are doing here today. This recording is at 5 p.m. The execution today is actually at 7 p.m. because DST is kicked in. So we're doing 11 a.m. and 7 p.m. executions from Malaysia. So it's basically lunchtime and dinner time executions. So I just have to prepare and set up my bots in time and just let it do its thing at the execution hour. I just have to tune in half an hour to make sure that I've got the bots aligned and the right order. C game anticipation, just over trading in range and under executing in trend. So that's the reason, partly the reason why I'm continuing to execute in range is to keep the engines warm and to make sure that I'm not as you might say, stiff with the muscles when the time comes to sprint. Zero distractions. Zero distractions is a state of mind. It's not really a physical state. I've got kids running around the house. I've got business things that are back in my head. But coming to this table, coming to this desk, coming to this video podcast, we're here to give a zero distraction analysis and a zero distraction execution. So to much for that fact, we're here, we're present now. Forecasting, A+ plan, and visualizing the outcome. Visualizing the outcome doesn't mean we attach ourselves to the outcome. I think that's one of the mistakes that I still sort of have and carry on from time to time. So we want to make sure that we're process focused for all our entries and exits. And let's head on into our chart recap. Let's change our overlays. Aha, that is the one. Okay, so what happened last week? What happened with me last week? We took that beautiful trade on Tuesday. Now beautiful is a state of mind now, right? So we knew that we were slightly over edge, and then we chose to take the day off on Wednesday, and then subsequently on Thursday, we came in expecting the price to refill the market to the bottom. But again, this is actually a ranging day too, so we were still excited on the Thursday. So this was a mistake that we want to correct moving forward. And looking at this, the market is really going sideways, isn't it? It opened on Tuesday here, it closed on Tuesday here, opened on Wednesday here, closed on Wednesday at the same level, and then back to the top at Thursday, which is just slightly higher than Tuesday, and then Wednesday is just, Friday is just trading within, and then now here we are. It looks sideways to the not naked eye, but as a trader, we will have a bias of somewhat sorts. Thank you, Mick. See, it's helpful. You have to think good of each other, right? I used to yell at my kids, and I still do at times, but sometimes they just mean well, don't they? Sometimes they're so helpful, aren't they? So, and that's the thing with the market as well. Sometimes I wanna just slow down and say, hey, look, the market's helping me. Why am I not receiving the help from the market? And it comes in many ways. It comes in the ways of saying, hey, here's your profit, take it. Or hey, we're about to go for a ride, get on the ride. So situations like this will occur again and again, and we're only here to make sure that we catch it in the right time. So first, before I continue the forecast, we're gonna go into a cleanup. We're gonna remove all our trades. We're gonna pull back this trend line because it's served its purpose now, the one at the bottom. So we can clearly see the price has pulled up from the bottom, and now we're well within Wednesday range. Tuesday high still remains the controller for this whole trend, and we're within last Monday still. So this is the pretext that we have. That's why I am not tempted. I am biased for a buyer this whole week, particularly because we've opened above. So it's more likely to do that than down before down and up. And this control line from the yellow is actually a weekly open from there, which is 3 weeks back. So that's my control, and I am leaning against a buy right now. So that is my execution for this London, and my support of that whole argument is I'm looking for 4,000 pips, by the way, 4,000 points, which is 400 pips, which may land up to there or well within the yellow line. 4,000 downwards would be below today's will be below today's open, depending on how low or high it is. So it looks like a good trade for me, particularly because 9 was trapped by Asia and now it broke out. So that is the first sign of a breakout in the absence of a 927 crossover, which happened 2 days ago. So this control high is gonna be, I think, a very good place that we launch out above. And should the next 2 candles play out right, we will have our trade somewhere here, and the buyer would fulfill upwards. Otherwise, we will see the market slow down for a bit and then continue tomorrow. That will be the second option. The third outcome would be the worst, is should the price hang out here and form a high and end the day just below, or pop above and come back in tomorrow, in which case we'll have to exit the trade, or immediately when it turns down and comes back into Asia, then we'll have to exit this trade. Otherwise, the buyer looks more promising than the seller, particularly in this low volatility situation. Now, the forecast is done. That is just the forecast. This may be a 1-day trade. This may be a multiple day trade, meaning it may take multiple days to fulfill, in which case the next couple of days may give us extra signals and extra information to digest. But at this point in time, this being London, the alternative is the 4,000 is just going to be within. There's no other way with it, right? It's 2 ways. So based on what I see, I'm keen on the buy. So any black candle looks better for a buy, but I'm also really conscious about. Really conscious. I gotta fix my vocabulary. Right? Papa's vocabulary not so good. Oh, fire engine is here too. Hello. Yeah, it's a moving fire train. Yeah, of course, it's fire engine. It's an engine, it moves. So I'm gonna just detach from the outcomes because it's 1 hour regardless, and I'm only going into my ranging accounts. Just let him be. You wanna sit over here? Come sit over here. Come, you can sit up here. So it's gonna be a 1 hour regardless either way. I'm looking on M30 right now just to see whether the smoothed average has come past my yellow line in M30. That would be a significant measuring point as well. And depending on where the London close is, it could be a coincident level. So as of now, I'm in a calm state of mind. I'm in a ready state of mind to execute in my ranging accounts. I'm here to execute the process. I'm just torn at this point in time because it's ranging. So I'm on this 50-50 point of saying, hey, it should be going inwards rather than trying to go for outwards. And maybe by the time the candle goes to the end, like, you see, like, there's two highs here. That's my real concern of this whole thing. So I'm gonna go seller. So that's why this is my decision point. Should the MA answer Asia from yesterday, we're going for the buyer. That's why the MA is my decision point, not just candles, because candles can trick us at times, though I do also use the candles to a certain degree. So my closing intentions is that I will execute in the right accounts today, which is the ranging accounts at lowered risk as well, at 0.6% risk. It's the first day of the month. We just want to get our toes wet. Yeah, just get our toes wet, and set up the things correctly. So we'll come back in later this week for our October review, with all our charts and whatnot. But until then,
Tigers.
What tiger? No, it's not tiger. It's Ren. Until then, I'll leave you. Oh, triggers, not tigers. Triggers. Triggers like gun. Boom, boom. So what triggers? Yeah. So I want to make sure that I don't get triggered into the wrong trade. To reiterate, since at the end it felt kind of 50-50. Decision is today we're going for a buyer. Buyer at London, expecting the high to break, especially when the M30 crossed that yellow line, the weekly open. And that would be our final say. And the exit trigger will be on the M30 turning down. That's why I chose that. And nonetheless, we will wrap up today. I'll see you tomorrow. Say bye, Gabby. Just wave. Put your hand here. Okay, and then open. And wave. Bye bye.